April 5th, 2026, wild day in crypto. Let's get into it. Quick shout out to today's sponsor, Compete Token, the gaming crypto that actually has real games. Link in the description. North Korea spent 6 months infiltrating Drift Protocol, then stole $270 million. And this might be the most insane hack story we've ever covered. A North Korean state group called UNC 4736 posed as a legit quant trading firm, showed up at real crypto conferences across multiple countries, deposited over $1 million of their own money, held actual working sessions with Drift contributors, and waited 6 months before draining $270 million on April 1st. Same crew that did the Radiant Capital hack in 2024. They compromised developer devices through a fake test flight app and a known VS Code vulnerability. You literally just had to open a file and your machine was owned. Pre-signed multi-sig transactions sat dormant for over a week, then fired in under a minute and emptied the vaults. If attackers will spend 6 months and $1 million building a cover story and meet you in person, what security model catches that? Bitcoin is stuck at $67K while fear and greed hits 9. And the vibe right now is genuinely rough. Sentiment says bearish posts now outnumber bullish ones 5-4. The most negative social skew since the Iran conflict kicked off on February 28th. The fear and greed index is sitting at 9 out of 100. Not bad, 9. Extreme fear territory. Here's the thing though, the price hasn't actually crashed. Bitcoin is grinding sideways in a $65K to $73K range while everyone panics around it. Whales have dumped 188,000 BTC over the past year. Overall market demand is negative 63,000 BTC per month, but ETFs bought 50,000 BTC in March alone, and they're holding the floor. Sentiment and price are completely disconnected. Sentiment says elevated FUD like this is usually a contrarian buy signal. We'll see. PolyMarket bet on whether a down soldier gets rescued, then Congress lost it. Someone listed a market asking users to wager on when U.S. authorities would confirm the rescue of airmen after an F-15E was shot down over Iran. Rep. Seth Moulton called it disgusting. PolyMarket pulled it within hours, admitted it should not have been listed, and said they're reviewing how it passed internal safeguards. Meanwhile, Iran invasion odds on PolyMarket surged to 63% after Trump posted something wild threatening to bomb power plants and bridges. There will be nothing like it. Brent crude is above $109 a barrel, and Bitcoin up less than 0.1% on the day. The market has basically priced the whole war in and is just sitting there unbothered. Bitcoin is now smarter than the Fed. A new Binance research report says Bitcoin's relationship with central bank policy has completely flipped since ETF approval in January 2024. Before ETFs, BTC would follow global easing cycles by several months. Now it moves in the opposite direction and 3 times as strongly. Bitcoin is pricing in Fed pivots before they happen. The reason is structural. Retail used to dominate crypto and react to macro news. ETFs let institutions in, and institutions make forward-looking bets months before policy changes. BTC may have evolved from a macro-lagging receiver to a leading pricer, Binance wrote. Basically, Bitcoin just became a real macro asset. Took long enough. Crypto's biggest regulatory bill is one Senate vote away. Coinbase CLO Paul Grewal went on Fox Business and said the Digital Asset Market Clarity Act is very close to a deal in the Senate Banking Committee. The only real holdup is a fight over whether stablecoins can pay yield. I think we're very close, Grewal said. If they resolve that, this goes to a floor vote. This would be the most significant crypto market structure legislation in U.S. history. Rules on which tokens are commodities versus securities, exchange registration requirements, DeFi oversight. The industry has been waiting 3 years for this. Don't pop the champagne yet, but this is the closest we've gotten. 80% of crypto tokens are underwater. Is the whole model broken? Blockworks co-founder Michael Ippolito went on X and called it an existential problem. The average token is barely above its 2020 price and down 50% from 2021. Median token returns are down 80% from their highs. And this is after a full bull cycle. The problem is simple. Way too many tokens, nowhere near enough value. DWF Labs found that over 80% of newly launched projects trade below their token generation event price within 3 months. Tokens peak in month 1 and then get destroyed by airdrops and early investor unlocks. Arthur Chung from Defiance Capital agreed it's urgent. The era of launch a token, get rich is quietly dying. Zach XBT says Circle let $420 million in dirty USDC walk. The on-chain detective dropped a thread accusing Circle of failing to freeze or blacklist about $420 million in illicit USDC flows across 15 hack and fraud cases since 2022. Cases include North Korean state hackers, the GMX exploit in July 2025, and the $200 million Cetus DEX hack in May 2025. Circle has the legal authority to freeze wallets and blacklist addresses. They just apparently didn't use it much. Zach XBT says they either took minimal action or did nothing. This lands right as the Genius stablecoin bill moves through Congress. Hard to build the case for USDC as safe, compliant infrastructure when the compliance record has 15 alleged failures. Circle hasn't responded publicly yet. Rich Dad author says 1974 broke the world and Bitcoin is the only fix. Robert Kiyosaki posted on X that the economic nightmare started in 1974. The petrodollar, the end of the gold standard, the shift away from pensions to 401ks has all arrived. Millions of baby boomers will soon find out they have no income once they stop working, he warned. He's calling for Bitcoin to hit $750,000 within a year of an imminent financial crash, which he says is coming. Love him or think he's a broken clock, the man has a massive audience, and posts like this move retail sentiment. He said the same kind of thing during every major bear market, and the price eventually recovered. At some point, the boy who cried wolf becomes a prophet. The guy who crashed the UK economy now thinks Bitcoin is the answer. Kwasi Kwarteng served 45 days as UK Chancellor in 2022. His mini budget sent gilt yields spiking, triggered a pension crisis, and became one of the most chaotic economic events in UK history. He has now joined Stack BTC, a UK Bitcoin treasury firm, and Nigel Farage, yes, that Nigel Farage, holds a 6% stake in Stack BTC. So the man who blew up UK bond markets and the leader of Reform UK are now Bitcoin investors together. Kwarteng described the mini budget as very, very rushed. Outstanding. Welcome to the Bitcoin community anyway, Kwasi. Nevada says Kalshi is just gambling with extra steps, and the judge agreed. A Nevada court extended a ban on Kalshi sports and event contracts through April 17th, ruling they're unlicensed gambling under state law. This is the first court-enforced state ban on a prediction market. The judge was blunt. No matter how you slice it, that conduct is indistinguishable from sports betting. Kalshi says its contracts are CFTC-regulated financial derivatives. The CFTC actually agrees with Kalshi and says it'll fight states in court to keep federal jurisdiction. So you've got federal regulators versus Nevada versus Utah versus Congress. PolyMarket just pulled a war rescue market, and JP Morgan is about to enter the prediction market space. Prediction markets are somehow having an even worse week than Bitcoin. Don't forget Compete token, real gaming crypto with actual games behind it. Link in the description. That's your April 5th crypto rundown. Stay sharp out there.